Now, ladies and gentlemen, welcome. It is the 24th of February, and my name is Christopher Aaron, and let's look at the gold and silver markets because they're really starting to pick up some steam here. We look at gold first, and we had a nice move today, falling back basically to the close from yesterday on Tuesday. Now, on the surface level, this looks like just a day that resulted in nothing. But when we look at it from the bigger picture perspective, you will see that this consolidation that we are seeing here is very, very bullish for both of the precious metals over the intermediate and therefore the long run. And let's look at silver. Also shooting up during the middle of the day and then falling back down. Falling a little more than gold. Silver still lagging gold. We know that it can do that for a few weeks or a few months or a few years. Now stay with me very closely here. I want to show you what's actually happening in the markets. We're looking at 4 different asset classes over the course of the last 3 days, Monday through Wednesday. We are looking at the S&P 500, the index that represents the bulk of the United States equity. We are looking at gold, we are looking at silver, and we are looking at the US dollar. Now, I want to draw your attention to the incredible inverse correlation that is happening right now between the stock market and the precious metals. So, for example, follow my mouse. Here we have the U.S. stock market, flat on Monday, a little bit weaker on Tuesday, falling in the morning today, and then rebounding. Compare that to gold, which was flat. Similarly, rising a little bit on Tuesday as opposed to falling on Tuesday, and then spiking in the morning today as opposed to falling in the morning, and then fading off into the afternoon as opposed to fading higher in the afternoon. There's almost a mirror reaction happening between gold and the S&P 500, and this is very significant. We're looking at silver following gold a little bit more extreme at certain times on the upside and on the downside, and we should expect that. If you're a silver investor, you must expect this kind of volatility, and you must be prepared for it over the years to come. Much more extreme than what we're seeing now. Interestingly, I want to draw your attention to the action in the US dollar. Even as we're seeing these wild fluctuations, up, down, 300 points, for example, in the Dow, the US dollar has been very flat. So this is a little bit confounding to the people who would tell you that the US dollar would be the beneficiary of any weakness. We are not seeing it yet. We are seeing gold and silver be beneficiaries. Very important, especially when we look at the S&P 500 and we notice the most obvious thing we can say, which is that this multi-year uptrend from 2009 through 2015 has been broken just here in the last few months. Zooming this in, look at this very closely. Here was that broken multi-year uptrend, including the last 2 bounces. Bounce, bounce, and then the break happening here right after the first of the year. Notice we have now had 2 failed attempts to recover this trend. Once, failed. Twice, failed. So these lines here are very significant. They represent trends in buying and selling, trends in human behavior, just as a map does. If you had a road map showing the interstates and the local roads, you would say this is an example of how humans move in the environment. Well, this is an example of how humans move through the markets. We have a broken uptrend in the S&P 500. We have a broken downtrend in the price of gold, which is looking very good right now as it consolidates after breaking above the October high. Gold is outperforming most of the other commodities in the world over the last year and a half, which typically precedes an important move. Silver also has a broken downtrend. It's just a little bit harder to see if you're not really paying attention to the day-to-day action. But we do that here, and we have early warning indicators also that this trend is now changing. I want to draw your attention to this small little red line right here. It's so difficult to see. This small little red line that almost touched our broken downtrend line here, the turquoise colored line. And I want to tell you there is a possibility that this was the retest of this broken downtrend line. That this one-day blip down to 1480 or so was the retest. And the price of silver is now going to move away from this line. I don't predict it will skyrocket, but a bottom signal looks very much confirmed. We're looking at the mining complex for some early warning indicators. First, the GDX fund related to gold, also silver, because the GDX fund contains about 10 silver mining companies. Look at the strong, nice uptrend we've formed here. A 2 up, 1 back, 2 up, 1 back, 2 up, 1 back pattern that we have forming right now. Well above the October highs. A new high today, even though it fell back in the afternoon. Looking at gold, we see gold consolidating. So we have an early warning indicator from the mining complex that gold may be moving higher after this consolidation. Switching over to the silver side, I follow silver Wheaton. I believe it is one of the better performing silver equities. It has some of the lowest cash costs out of all of the silver mining companies, making a new high above its October high. Notice this ratio when we switch to silver, and we see silver having broken this downtrend, still below its October high. These patterns must be respected. They are giving us clues that this was a significant long-term bottom in the price of silver. I expect silver to be rising in the short term, which would give us even more weight to this bottoming signal. It's a stealth breakout right now. I've labeled this stealth breakout because most people are not aware of this. Most people who just look at the price of silver casually or who look at 10-year charts, they're not zooming in to this level of detail. They're not aware of what's happening here. But this was a very significant break of this downtrend level, and I expect a move higher at some point in the next week or two to confirm that. Thank you for being with me, and just remember these bottoming breakout signals as they consolidate are very healthy. Consolidations should be welcomed because markets that consolidate then have another leg to stand on and to move higher, whereas markets that shoot straight upward don't tend to have the staying power that would be ideal. So I am working on a model for my predictions for the gold market. I'll have that in the next video on Sunday. It's based on the model of the 1970s. There are some very interesting correlations between the 70s model and the current model. I'm working on that now. I will see you on Sunday evening. Thank you very much for watching.